Hey everybody, welcome back. And falling mortgage rates actually have been having a pretty significant impact on refinances and on purchases. Let's get into that. Let's get the show on the road. All right, so when we take a look at this, basically a result of the 30-year fixed rate mortgage has been going down consistently over the last 3 to 4 weeks. And as we take a look at what that has as an impact, especially on refinances, when, you know, year over year, our rates have, well, they've been pretty much spot on the entire time. They've up a little tiny bit, down a little tiny bit, not a big difference between the bunch at all. So what it is doing, though, it's giving that buyer confidence back in the sense of they are coming off of the sidelines and entering into the market. And you're going to see that as we start proceeding through with some of the charts. But let's take a look at this one. Seasonally adjusted purchase price index increased by 2%. Now, that's super, super interesting because we've been hearing a lot of information about, you know, the market is going down, everything's going sideways. There's mixed metrics on unemployment between the administrations. You just, you know, I was talking to my buddy Joe earlier, and it's like, you know, who do you believe? You have lies, you have damn lies, and then you have statistics, right? But each week we're going to just go through consistent metrics. No, funny enough. In fact, we're just using information through our friends there at Trend Graphics that helps us each and every day as we evaluate numbers and then bring them to you each and every week. So with that, I guess that removes that side of it. But once we come back here and we take a look at it, you can see the index as far as our purchase index has been heading in a positive trend. We spiked when interest rates came down. We're at our midline, but we're better than where we were at last year, and by a little bit, not a ton, but you can see things are heading in a upward direction. And so when we take a look at headlines, upper left, you know, falling rates spark modest rebound in mortgage applications that we have today. Bottom left, mortgage rates hit another new long-term low. And in fact, what we're looking at is a low that has been the lowest since in over the last 10 months. And it was as predicted as we go down because we did not see a Fed rate drop. Now there's some folks that say, oh, hey, we need the Feds to drop the rates because mortgage rates will follow. Okay, that's not always the case. And in fact, the last 5 times, the Fed rate went down and mortgage rates actually spiked up. You'll see that on the Freddie Mac chart because we do circle it and identify it, all right? So when we get back here, 30-year, they went up just 0.02 on Friday, but still 6.5% par pricing rate is still pretty impressive. And then, of course, mortgage rates hold near July lows ahead of jobs report, which was earlier this week, report that came out. Now, let's move over. Let's take a look at Freddie. And as you can see, we circled on the left-hand side, August numbers coming into September, we headed in a downward trend, just like you see on the right-hand side, situation normal. The difference is the dip, which is the bottom, you're going to see a significant change in mortgage rates as far as probably what the media is talking about year over year, because mortgage rates actually went down to 6.02, 6.03, and then the Feds dropped a half a point, boom, everything shot up. So over the next few weeks, as we get into September, you're going to hear probably the media saying, oh, rates are higher than it was last year, mayhem, bedlam, cats and dogs falling out of the sky, whatever it might be. But that was last year and situation normal. We are exactly where we should normally be. We will probably see some lower rates in September again when the Feds meet. Yes, we are saying there's a 50-50 chance that we're going to see the Feds do a rate drop, and more than likely we're going to see a mortgage interest rate increase. So as we take a look at that, don't be surprised as you see that, but we are expecting rates to continue in a downward trend really until probably, I would say, mid-September. Now, when we take a look at our pricing, hey, everything is situation normal from where we were at last week. And in fact, the running 7-day average, again, similar numbers. We have 1,026 homes that came on market, the average of the last 7 days. We had 1,144 that went pended. So we're having more homes go pended than are coming on market, which is doing a drawdown on the inventory. And that's a super important thing to understand. It is seasonally normal. Look, when we take a look at the closings that are going to start happening in August, those are contracts that happened in July, okay? Because it takes 30 days on average to close. So there's that latency that happens. And so when you're hearing numbers, people are talking about, June closings. Oh, June closings were a little slow. Okay, well, that was May's contracts, which is not unexpected because we have things slow down. And then as we continue to roll through the year, all of a sudden the numbers start improving a little bit, and then seasonally they fall off. That is situation normal. All right. So as we head over, let's take a look at the Northwest MLS, and let's open this back up. All right. So when we pop over here and we take a look at our numbers, I wanted to bring a little bit of clarity. If you look at the center chart here, okay? Now, the center chart, which is just above my head here, you can see the month to date. That's month over month, 2024 versus 2025, all right? So when we open this up, you can see, look, hey, we have, 77 less homes. Actually, I believe we made a bigger chart. There we go. So look at the bottom, 77 less sold homes month to date. Okay, that's not that big of a deal. But we are up, which is a dynamic number, 758 homes, which is newer, right? That's just the month of August. We're talking about up until the 8th. So we're seeing more pended sales than the number of homes that we are low on. However, year to date, look, we're up 1.9% for pended. We're up 1.3%. So we're still heading in that positive direction. And we talk about new homes coming on market more than last year. It's only, 5,000, it's 1,500 homes, 5,823 to be exact. All right. And that's not a lot of homes. If you think about it, over 3/4 of Washington state. Okay, yes, it's a few homes, but it's not massive. About 500 homes per month. Now it's closer to about 750 homes per month, more than what we saw last year. Okay, that's not unexpected. The cycle had to happen. We needed that inventory. We're seeing more of a balanced inventory, which is super awesome. When we take a look at what is a real metric, and we look at it each and every week, prices for the month of August are up 4.7% year over year, 1.1% up year to date. And you're going to find that to be very much the same with new construction. So when we take a look at that, our numbers, which, the new construction solds have been in the negative all year long. Now, the difference is they've been capturing a little bit of ground each and every month. They've been recouping off of that, and that will change in November unless we see significant rate drops. They've been offering more incentives, their pricing, actual sales price is actually up. That's another good benefit. When we pop back in here and we take a look at the fact that, hey, sure, they're down what is called, 32% on solds for the month. But we will see more. That will change as we get towards the end of the month. But pendeds are up 21.3%, which is an excellent number. When we roll over, and that's just a tighter in that. When we roll over and we take a look at pricing, pricing took a pretty good jump in August, especially over last year. And it is even up year over year again. So these numbers, as we talk about pricing, are consistently heading in a positive direction for the most part, right? Then when we take a look at it, this is a kind of a visual, picture's worth 1,000 words. And you can see clearly right here, hey, what's been happening recently. we've seen a massive shift and increase with new construction sales. That's the red line, and also what their pricing point is. Not unexpected. Why? Seasonally normal. It's the same thing that happened last year. The question is, will this continue, or when will it actually start to break over? It'll probably start breaking over in October, which that's pretty much normal. Okay. When we come back and we take a look at bank-owned homes, look, the numbers that you're going to see here shortly, which are these numbers right here, that shows that our listings are up quite a bit. And they say, oh, hey, you know what? You're up 28.6%. Well, no, not really, because we went through just on this screenshot and I put an X through all of the homes that are mismarked, meaning that they are individually owned. They're not REOs or bank-owned homes. Those are just input incorrectly. And as you can see, almost all of those on the east side, all of them on the east side were input incorrectly, unfortunately. And yes, we do reach out. But here's the thing. When we take a look at the month of August, okay, look, it says we have a 45% increase in inventory. It was 5 homes. That's nothing. Oh, look, we have a 40% increase in sales. That was 2 homes. Oh, look, we have a 66, almost 67% increase in pending. That's 2 homes also. So again, you take a small set of homes and make it, and you double it. It's misleading. And part of Olympia, in my humble opinion, is doing that to you and trying to justify additional taxes and whatnot for something that, look, we're like one of the lowest default rates throughout the United States. Okay. I'm just saying, don't be caught up into their minutia. Get the actual real numbers, not percentages, because I just showed you right there, 2 homes constituted a 67% increase in pending. It's just wrong. Anyway, that's my 2 cents. If you have any questions, post them down below. Smash that subscribe button. Let me know that you like what you're hearing and what you're seeing. Share this link with 2 people you like and 1 person you don't. Just for the fun of it, right? In the meantime, it's a beautiful weekend. Have an absolutely beautiful day. I will see you on the next video. Take care.